If you thought last week was crazy for Nano Dimension, just wait to see what this week has in store for us. By now, I'm sure that you've already heard about this dilemma from Friday, and I know that other YouTubers have already even reported on it, but the problem is that they didn't do a good enough job, which is why I'm having to record on my day off. So in this video, I'm going to be preparing you for Monday, and we're also going to be taking a look at this bogus filing. But that's actually not the end of it. We've got some other stuff to talk about too, so make sure you don't go anywhere because I think you're going to like this, and we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. Welcome back to the channel, everyone. So today we're going to be talking about NNDM, or Nano Dimension. What you're looking at on your screen right now is a Form F-60F, which is typically the type of filing that's used by publicly traded foreign companies to register with the SEC before they can offer ADRs, or American Depository Receipts. Now, we saw this document circulating on Friday, and it did cause a bit of a panic, and it was intentionally put out there to cause a sell-off by tricking shareholders into believing that there was going to be some share dilution. Essentially, anyone looking over this document that didn't realize that it was fake would be under the impression that 100 million shares would immediately be hitting the market at a max price of only $5. Oftentimes when we see things like this happen, we tend to overreact and take action before actually questioning the situation. And this was obviously the case here, which helped contribute to the overall problem. Now, unsuspecting shareholders panicked and sold off their positions, and then probably wanted to spread the word thinking that they were actually helping, but instead they were tricked into working for the scammers, pretty much doing all the legwork for them. In hindsight, it's easy to look back at a situation and beat yourself up over how you could have done things differently, but in all reality, when confronted with these types of events, panic tends to set in, and it's pretty hard to actually think rationally. That being said, it's pretty much easier than ever before for these scammers to do things like this and get away with them. So what I want to do today is actually show you exactly what to look for so that next time this situation, or a situation like this, presents itself, you guys will be better equipped to deal with it. But first, let me say this. So on the day that we saw this fake document going around, there was an actual SEC filing for a shelf offering that I do want to mention very quickly. It won't take me very long. And then we can wrap it up with me telling you guys what I think is going to happen with NNDM coming into next week. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Alright, so what we're actually looking at here is a registration statement on Form F3, which is for a shelf offering, which came out on the same day that the fraudulent document was floating around, and that was basically on Friday. So I'm not going to take a whole bunch of time, or a whole bunch of your time, going over all this. I think that most people actually understand the big picture here, so I'm just going to give you guys the Cliff's Notes, but if anyone does have any questions that they want answered, feel free to ask those in the comments below, and I'm going to do my best to get to all of them. So the number one thing that you need to know is the par value of $5 per share, meaning that $5 is the lowest amount per share that these shares will be sold. Number two, there's an indeterminate amount of shares, meaning we don't even know how many shares will be issued at this time. The number three here is, when will these shares be issued? So what they say in the filing is from time to time. And what does that mean? Well, it means exactly that, from time to time. It means that we do not have that information. It means that whenever they feel like it, they can issue those shares. So we do not know how many shares will be issued, and we do not know when they will be issued. But one thing that we do know is that they're going to have to supplement the prospectus before they can issue any shares. So basically, I don't think there's anything to worry about here. If they're wanting to do a direct offering, then they would do one, and we wouldn't find out about it until it actually got filed. In this case, it's almost the same thing. I mean, we know that dilution is coming, but we also don't know when it's coming. And we're pretty much waiting on them to file a supplement to the prospectus, which would be, giving us about the same amount of notice that we would get from them just filing something to do a direct offering. So to me, it's all the same thing. It's not anything different than I, wasn't already expecting from a penny stock, which I'm perfectly fine with it. I understand what and why these things are done. I understand that these companies need to do this in order to raise the capital that they need. Now, so the question becomes, what are they using this money for? Is it going to be, are they raising the capital for something that's going to benefit the company? Because if not, then that's when it's time to be concerned. And I almost forgot to mention this, but with shelf offerings, typically you see a 3-year window in which these companies have to issue the shares. And after that 3 years, it's closed out. So we know at least that it'll be going on in 3 years or within 3 years, if that helps. But I think that pretty much covers that topic. And now, as promised, let's talk about how to recognize or spot a bad filing. Now, if you'll recall, this fraudulent document was shared through a link, and the link led back to a fraudulent website, which was utilizing a TLD, which stands for top-level domain, or you can simply just call it a domain extension. But my point is that this domain extension in the link is .report, which is in fact different from what the SEC uses, which is .gov. Now, back in 2014, domain registrars decided to get really creative and started putting out and heavily pushing all sorts of new and fun top-level domains. Now, this unfortunately opened up a whole new opportunity for different online scams. In our case, we know that the scammer was able to purchase a domain name with the acronym SEC in it, which we know that the SEC uses in their domain name, seeing as how this stands for the Securities and Exchange Commission. Nowadays, it's extremely easy to steal the design of a website. So the first thing that you'll want to do is to double check any links that anybody sends to you that's, not a credible source, to make sure that the domain name matches up with what it's supposed to be. If it's something you're not sure about, then you can basically Google the name or Google the domain and put the word scam behind it. And the idea behind that is that if this person or this website has been reported for scamming in the past, it will show up if it's been reported previously. But a lot of times these scammers have become more advanced. So what they do is buy up a whole bunch of domains at one time. They let them age a little bit, and then they'll run their scam. They'll let that domain go, let it die, and then they'll deploy another domain name to which they're going to upload the same exact site to. So it won't always show up, or you won't always have results showing up that will let you know that the site is a scam. Another thing to do would be to read through whatever document you have, read through the website, and look for any type of spelling errors or grammatical errors, anything that just looks off. So in our example, sec.report, when you Google this, or if you just type in SEC, you will see that this site, sec.report, shows up way down at the bottom of the pages on Google, which is already a bad sign. You want that to show up as number 1. You should just be able to put SEC in the search engine and it to show up as number 1, because if it's the actual real deal site, then it's going to be showing up as number 1. And we see that sec.gov shows up as number 1. Back to my point though, when you look at sec.report, there's a tagline usually, or a description, a short description or a tagline for every website on the internet, unless the creator just didn't put one in there, but most sites will have it. And when you read that description for sec.report, you'll see that it says something about the Security and Exchange Commission, as opposed to saying the Securities and Exchange Commission. Seems like a minor detail, but it's a telltale sign that something's wrong. And then there's always doing a whois lookup. So that's WHOIS. Now, I can tell you that all of these scammers will be using whoisguard, which pretty much protects their identity. It's going to give you a different name, phone number, address. All their information will be kept private. But there's other info in there that we're actually looking for, which will let us know whether or not this site is legit, and it's going to let us know fairly quickly. So one thing we want to do is look at the age of the site. In this case, we see that the domain name was registered in 2018, which doesn't make much sense, does it? Because the SEC has been around much longer than 2018. Number two, we see that this site is actually registered, or that this domain is registered out of Panama. Now, I don't know about you, but I've got a very hard time believing that the United States Securities and Exchange Commission is going to be registered out of Panama. So there you have it, ladies and gentlemen. Those are some very quick ways to tell whether or not a website is legit, which will let you know whether or not anything that's coming from that website is legit. But now, here are my thoughts on what to do with NNDM moving forward, or moving into next week. And I'm going to explain my logic behind this. So overall, I think that the stock is going to go up, and here's why. So we just had a major pullback, and of course it was caused by what we thought was a share offering. Now, usually when this stock does pull back or drop, it's because of a share offering, and it's no secret that this stock, or the company, does offerings very frequently. Now, so as we're familiar with the pattern, we'll get an offering, and then as soon as it's closed, the stock recovers. It recovers, and then it slowly moves up. Now, lately we've seen some bigger moves upward because we're anticipating, maybe some good news, but what I'm going to assume is that the pattern will continue. We thought we had an offering, so the stock fell, and now the pattern should continue by the stock moving back up, or recovering and then moving back up from what we thought was a drop coming from the share offering that was fake. Now, I will say this: we did have that shelf filing, but that's not going to dilute shares right now, not right this moment, unless, of course, they decide to issue out some of those shares. Now, we don't know when it's coming. We don't know how many shares are coming. That is something to be out on the lookout for. From what I'm hearing, there will be no more offerings until after 2020, but you can't count on that. And if the stock makes a big move, if we see anything, bigger than what we've seen recently, if we see new highs, think about it. There's going to be a share offering, because the company's going to want to capitalize on that higher share price that may not be there for much longer, or they don't know when it's going to drop. They're going to take their money, and I can't blame them for that. I would do the same thing. But that's just the one thing for you guys to be aware of. If, or once the stock moves up, and especially above where it was, expect that offering to come into play, or expect that some shares will be issued at that point. So here's what I'm doing with my position. So I have a position already, obviously. I'm pretty much not doing anything with it. I don't plan on selling. I plan on just holding. I really don't care what happens or how much the stock runs up. That's my position, my shares that I pretty much made free through trading the stock in the past, and I'm just going to continue holding, because a lot of times when I do sell and I think I'm getting a big profit, the stock tends to keep going up, and then it's too late to get in. It's happened to me too many times. So, I've learned to buy more shares than I actually want, so that way I can sell shares when I need to, but I've still got some shares that I can hold on to without having to worry about it. Now, generally, I would be selling covered calls, but this is still kind of a penny stock, and it doesn't make sense for the most part to be selling covered calls. Now, I do have a bunch of puts that I've sold on this company, and that's how I plan on acquiring more position, or a larger position in this company. Congratulations, ladies and gentlemen, you've made it to the end of the video. If you found this video helpful, I ask that you help this channel out by smashing that like button, as it motivates me to keep making videos just like this one every single day. If you're not a subscriber, you should consider subscribing, as I publish valuable content like this daily. You can do so from your screen right now, and if you want to check out more of my videos, you can click on the video that you'd like to see on your screen right now. Thanks for watching, and I will see you guys in the next video.